Hi there everyone, welcome back to a new video. This one is going to be all around reversals, how to spot them, how to trade them, and hopefully by the end of this video you are going to be in a better position to take these trades yourself and hopefully profit along the way. So very quickly, I just want to go over what reversals are. This is just going to be a very quick part. So the main thing is that it's a trending market coming to an end. So a market moving up in an uptrend, then potentially catching the reversal or the profit taken from that move is obviously what we're looking at doing. If the prices are moving down in a downtrend, vice versa, but with a buy. So reversals are quite good because you've got the opportunity to potentially get good risk to reward from these trades. Now, not every single trade that is a reversal is going to end up doing, huge moves because that's not how the market works. But a lot of the time you will be able to catch a nice move off the back end of this because you will see an increase in volume with people coming into the market who all see the same thing. So there's three things in this video that I am going to go over to allow you to spot these reversals. They are three things that you can look at when identifying areas within the market, and using these three things either together or separately could be quite good for your own trading. So the first one is going to be a change of character. This is what a lot of people know, and it's basically just a shift in market structure. I am going to go over that in a bit more detail in the next slide, but for now, that is the first point. The second one is going to be reversal patterns. So it's not necessarily a change of character or a change of market structure. It's a pattern that can be created within the market where we may see a reversal happen from. And to be honest with you guys, when you see them, they're really clean, they're really good, and hopefully then you can start seeing them yourself on the charts. The third one is going to be a trend line break. Some people like trend lines, some people don't. From my experience, trend lines themselves, they do end up being quite good, especially if you find ones which have been respected over and over again. So first of all, let's go over the change of character. So if we look to the left-hand side of the screen, you can see an uptrending market, and then the blue kind of circle is what we identify as the higher low within the market. So this market on the left is creating higher highs and higher lows, and then once that higher low is broken, that is what we call a change of character, a market structure shift, whatever you want to call it, but that's basically what it is. In a downtrending market, it's exactly the same, just in reverse. So you've got a downtrending market with lower highs and lower lows. That lower high is then broken, so we can potentially see some new volume come into the market off the back end of this. In this example here, you can see this work out perfectly. So on the left-hand side, you can see a market with a sharp move to the upside. Price then created this higher low within the market, and then once price broke below it, we got a retest. If you'd have entered, you'd have obviously profited from the move. Regarding entries, guys, obviously there's a couple of things that you can do. You can incorporate them into a strategy that you currently trade, or for me with pending orders, I like to see a change of character and then some confluence within the area that I'm looking at. If we look on the right-hand side, same again, downtrending market. And just a quick disclaimer, this can happen on any time frame, okay? So whether it's the 1 minute, the 4 hour, the daily, the weekly, whatever it is, this is all relevant. On the right-hand side, we had the downtrending market. Price then created this lower high. Prices then broke the lower high, retested it, and then we've seen a sharp move to the upside. So the market structure shift is very, very simple. Keep this in mind when you are looking at it. If you want to draw it out or just take a look, that's absolutely fine. But for me, this is the biggest thing that I would be looking at. The next one is going to be the reversal patterns. The best reversal pattern that I personally like to use within my trading is what we call a head and shoulders. This on the left is what we call a normal head and shoulders, where you've almost got left shoulder, a head, and then the right shoulder. So that's the reason it's called that. What you will tend to find is that if you see this formation play out, price will sometimes come to retest the left shoulder and make a right one before then doing a reversal and seeing volume come into the market. This example on the right is what we call an inverse head and shoulders, which just means it's the inverse of this. Same again, price creates a low, lower low, price pushes up, comes back down, retests that left shoulder, and then you see a move to the upside. This is probably one of the best and the cleanest things that you can look for, although just a quick disclaimer, they are not always going to look as clean as this. So if we look in these examples here, the one on the left is quite clean. You had your left shoulder, and it doesn't have to be 1 point, it can be a level. Left shoulder, head, break, retest, retested the right shoulder to create it, and then we saw a big push within the market. So that's something to keep an eye on. In the right example here, exactly the same, but it's not as clean. As you can see, left shoulder, price pushes up, pushes back down, creates a new low, back into this left shoulder area before pushing down. So like I say, it's not always going to be as clean as that, but if you see a high created on the left, a new high, and then a retest of the first high, and I hope that makes sense, then you are in good position to potentially take a trade. So that's the second reversal pattern that I would look for if you can build confluence around them. The next one is the trend line break, and this is also a very powerful one if used correctly. So in an uptrending market, when we draw a trend line connecting the lows, you may see that price respects this trend line quite heavily. Once price then breaks that trend line, we could then see a change within the market due to the fact of that trend then being broken. Trend lines sometimes are very subjective, so if you find the strongest trend lines possible, they're obviously going to be the ones that are worth trading. Okay? On the right-hand side, exact same, downtrending market. The highs are respecting it. We then get a break, and then what does this look like on the chart? It looks like this. So you can see there's two trend lines here. This first one, you had a touch at the bottom, a few touches there. Price then broke the trend line on this blue circle. And what can you actually see? Price came back to retest the structure on the left, created resistance, and then pushed down through the trend line. Exact same on the right-hand side. You had a touch here, a touch there, a touch there. Price then broke the trend line at the blue circle, and exactly the same thing happened. Break, retest of that structure. So you could even call this almost like a head and shoulders. Same with this, and then a retest. So what you will tend to find is that if price has respected a trend line, if you see structure to the left or right, mainly the left obviously, then obviously following that, you are going to potentially get a nice entry for a reversal. So they are the three things that I potentially take into consideration when looking at reversals in the market. I don't go actively looking for reversals for my trades. I just know that when they present themselves, it's potentially worth extending my take profit or just having a different plan to maximize my risk to reward. So I'm hopeful, guys, that this video has been insightful. Remember, 3 videos a week on this channel now, so subscribe if you haven't already. Any questions, drop them below, and I'll see you in the next